Hello everyone, Brittany Elliott here, and in this video, we're going to talk about credit scores and how to improve them. But quick, before we get started, go ahead, click the subscribe button and the bell icon to turn on notifications so that you don't miss out on future videos. All right, let's get started. A good credit score can help you secure better interest rates on loans, mortgages, credit cards, and other financial products. But it can also help lower your auto insurance premiums and even reduce the security deposit when you go to rent an apartment. It can take some time to increase your score, so begin implementing the steps that I'm going to share with you here as soon as possible, ASAP. Also, stick with me to the end so that you don't miss out on any of the tips. For starters, let's take a look at what a credit score is. A credit score is designed to represent your credit risk, or the likelihood that you'll pay back money that you borrow. Creditors and lenders consider your credit score as one major factor when deciding whether to approve you for a loan or a credit card. Your credit score may also impact your interest rates and other terms and conditions for the loan or other credit account that you're applying for. There are three nationwide credit reporting agencies: Equifax, TransUnion, and Experian. Your credit scores may be different at each of these, but as long as all of your lenders are reporting all of your information, they should be pretty similar between each institution. Credit scores range from 300 to 850. Lenders will have their own breakdown of these ranges, but they're generally similar to the following. So a credit score of 300 to 59, for example, would be considered poor credit. 580 to 669, fair. 670 to 739, good credit. 740 to 799 is very good. And if you are over 800, you are excellent as far as credit scores go. Now, how quickly you can increase your score depends on a number of factors, but regardless of where you're starting, the following 8 tips will help you improve your score over time. So, tip number 1, pay all of your bills on time. I'm sure a lot of you already know that this one is important, but your payment history is the most important factor in determining your credit score. This shows creditors whether or not you can be trusted to uphold your end of an agreement if they loan you money. So to make sure that you're doing this, set up account reminders or schedule automatic payments for at least the minimum payment due. This will ensure that you don't miss a payment. Late payments can stay on your report for up to 7 years, so avoid them at all costs. You do not want to be late on paying your bills. If you happen to already be behind on your payments, get current as soon as possible. The sooner you do, the sooner you can start repairing the damage that's been done. So if you have a history of paying on time, but then say you just failed to do so once, something just slipped your mind and you missed one payment one time, you were late once, call that creditor, because if you have a good history with them and this is your first offense, chances are they might just remove that late payment for you. They reverse the funds and then not report it as being late. Okay, tip number 2 is to reduce your credit card balances. More importantly, your credit utilization rate. This is the second biggest factor affecting your credit score. Your credit utilization rate is the balance you currently owe on a credit card or line of credit divided by the total credit limit on that card or credit line. You should aim to use no more than 30% of your available credit at any given time. Less is better. People with the highest credit scores tend to have credit utilization rates below 10%. So strive to get down to those numbers as quickly as possible if you're already above them. So for example, if you have a credit card with a limit of $5,000, using the 30% guideline, you would need to keep that balance below $1,500. Using the 10% guideline, you would need to keep that balance below $500. If you currently have credit cards with balances above these thresholds, again, work to pay them down as quickly as possible. Every step that you make towards those lower numbers is only going to help. You don't need to wait till you can do it all in one lump sum. Just keep knocking them down as fast as you can. I'm going to say this next part cautiously. Another way to reduce your credit utilization rate quickly is to increase your credit limits. But I'm going to stop here and give a strong warning. Only do this if you are already in control of your spending and will not be tempted to use the additional credit. If you think that you may be tempted even the slightest bit to rack up additional credit debt because you have these higher limits now, please do not do this. Do not do this. Do not do this. I can't say it enough. Only do this next step if you are in control of your spending and you will not use the extra credit to borrow more money, because that's defeating the purpose here. So as long as that doesn't apply to you at all, here's what you can do. Contact your credit card companies that you already have existing and ask them if you can get an increase to your credit limit. They will want to take into consideration, what your current income is, what your current credit score is, things that have changed since you originally applied for it. But this can usually easily be done, especially if you have a good payment history with them. It's usually pretty easy to get at least somewhat of an increase. But again, don't use the extra credit line to borrow more money and add to your debt. Just use that as having an extra amount out there to help reduce your credit utilization rate. Tip number 3 is stop and think twice before closing out any old accounts that you aren't using anymore, especially your oldest account. Your length of credit history is a factor in determining your credit score. So keeping an old account around can be beneficial. If it's an old credit card that you don't prefer to use anymore because maybe it doesn't offer cash back, doesn't offer points, those old cards we have before they started offering all these fancy new features, just keep it, but use it for something small, such as, put a subscription on it, something that's $4.99 a month, for example. Just set that to be automatically paid by that card. And then so that you don't forget about it, since this is just this tiny little thing floating out there, set up automatic payments to occur for the full balance every single month. That will keep this card active, and it will keep your length of credit history much longer than if you were to close this old account. So it's definitely worth keeping around. Just set it up for something small, automate the whole thing so you can just forget about it. Tip number 4 is limit how often you apply for new accounts. When you apply for a new loan or credit card, it will almost certainly trigger what's called a hard inquiry on your credit report. If you have too many hard inquiries within, a relatively short period of time, say, a few weeks, few months, it will end up lowering your credit score. This will usually kind of trigger as a flag, why is this person wanting to borrow money from so many different places? Now, an exception to this is, say you're rate shopping, you're, especially for a mortgage, you might go and apply with several different places to see what interest rates they'll give you. That, or you're shopping for a car and you're, gone to a couple different dealerships and they're all pulling your report. These typically occur within, a few days or, a week, 2 at the most. Oftentimes the credit reporting agencies will recognize this and they'll lump that together and treat it as if it were one inquiry. So, even though you went to, 3 different lenders and had 3 different hits, they might only affect your score as if you had one inquiry, because the credit bureaus are recognizing that this is, that this is rate shopping. This is, you're trying to get the exact same type of loan all in a very short period of time. Now, if it's strung out, you did one thing one month, one thing another month, then they're going to be reported as separate. Additionally, opening new accounts will decrease the average age of your accounts. So like we talked about before with keeping the oldest account open, so you have this long track record, it also looks at the average age of the accounts that you have open. So if you open up a whole bunch of new accounts, then collectively that's going to reduce the average age of the accounts that you own. So don't be opening up a ton of new accounts, because 1, it's going to affect the age, but 2, it's going to do those hard inquiries and affect your credit score as somebody who's constantly looking to borrow money. That brings us to tip number 5, which is having a variety of credit can help improve your score. So I'm only mentioning this because it does have an impact on your credit score, but I'm certainly not saying go out and get a loan or borrow money just to hopefully increase your score a few points. Don't do that. So it's more just, I want you to be aware of it. So mortgages, auto loans, and credit cards are each different types of credit. So if you only have a credit card and no other debt, then going out and applying for a second credit card can actually help your score because you'll have more than one accounts. At the very beginning, it might take a little bit of a dip because you've got a new hard inquiry, you've done a new account, but overall that can help improve because it'll show that you are paying 2 different lenders on time every month. Especially if you're not carrying a balance, that's great too. So don't go get another card just to borrow money. I'll go back to my warning before. I'm never going to tell you go borrow money to up your credit score. Bad idea. So just if you already have if you only have one credit card and that's all of your debt, you don't have a mortgage, you don't have a car loan, it's worth it. Go look for another card. Maybe you just have, a regular cashback card now. Go see if there's a card that can give you a better rate on, dining out or travel or whatever you frequently do, because there's a lot of great options out there now. Look for no fees, but look for, good bonuses and good cashback or good rewards. The same situation would also apply if you only have a mortgage and no other debt. So have a mortgage. If you don't have a credit card, go get a credit card. Only if you feel you'll be responsible enough to use it. I feel like I have to keep putting all these warnings out there, but I don't want anybody to get this takeaway of, oh, I should go get a credit card and use it. Yes, you should get a credit card and use it, but pay it off every month. Use it wisely. Get the points, improve your credit, have the convenience and that, added security features of using it, but don't use credit to rack up debt. It's the most expensive, one of the most expensive debts you can have. So while we're talking about credit cards, that brings us to tip number 6, which is consider applying for a secured credit card. This tip only applies in certain situations. For example, if you have little or no credit history, or if you have poor credit history, you may find it difficult to get approved for a regular loan or a regular credit card. So what you can do is you can go and apply for a secured credit card to help build your credit history over time. This type of card is actually backed by a cash deposit. So you will actually give the bank or credit union or whoever's got this secured card, you'll actually give them a deposit of funds that usually equals the credit limit that they give you. So they're just holding your money. So say, for example, they give you a $300 credit limit on a secured card because you deposit $300 and they just hold that in account. It's still your money. It's just that is being used as collateral to secure this credit card, which makes it much less risky for the lending institution. But then you go out and you use that card every month and you pay it off every month. You are improving your credit just as if you were using a regular credit card. So it's a great way to start out if, you don't, like I said, you don't have any credit, or if you've got poor credit and you're trying to repair it. So now we're at tip number 7, which is pay off any accounts you have in collections. If you happen to have any accounts in collections, you need to work to pay them off as quickly as possible because they are hurting your credit score. And also they're probably accruing extra interest, and we just need to clean them up. Once you get them paid off, you may be able to persuade the collection agency to then stop reporting the debt to the credit bureaus once it has been paid off. It certainly can't hurt to ask. So if you have accounts in collections, if you get that account paid off, call the collection agency, ask if they'll consider no longer reporting it since you have paid it off. Otherwise, it'll show as out there, but it can show as paid in full. You want the most favorable thing on your credit report. So definitely ask them what they're willing to do to help you out there once you've paid it off. Also, if you have accounts that are in collections and they've been there for a long time, you might be able to negotiate a settlement. So this is where you have this account out there. This happens most often for people with medical bills. When they're younger, you run into stuff and you've racked up these medical debts and then you forget about them, you haven't paid them off. But anyway, so you want to call and see if they are willing to take a smaller amount as paid in full. Now, this would need to be a lump sum payment. It's not going to be a payment plan thing, because if they can see you can do a payment plan, they're going to want you to just keep doing that for the full amount. So you can try to negotiate if they will, knock off a lot of the interest and fees and just go down to the regular balance. Or sometimes, say you have a $4,000 debt, but you've saved up $2,000 in cash. You can call up and say, hey, look, this has been out there for a long time. I can pay you guys $2,000 if that can just wipe this whole thing out. Now, if they agree to this, you want to make sure that you get that agreement in writing, that they will accept that amount as payment in full and close the account out. and wipe out the rest of the debt. You need to have this in writing before you send them any money, because otherwise you have nothing to fall back on. If you go ahead and send them the payment, but you don't have anything in writing, and then they tell you still owe the rest of it, guess what? You still owe the rest of it because you have no agreement in writing proving otherwise. So always get it in writing before you send them any money, before you send them, access to your checking account to withdraw. And I would never do that either. Just actually write a check, mail it in. If they want it to be a certified cashier's check, fine. Go to your bank or credit union, get a certified check, and send it in. And finally, we are at tip number 8. Tip number 8 is to be sure to review your credit reports annually. You can visit the website annualcreditreport.com to obtain your credit reports for free. Not free credit report, not any of these others. If you go to annualcreditreport.com, you can access your credit reports for free once per year. So I'll put a link to this down in the description, but you want to review these on a regular basis so that you can verify that your information is accurate. So if you notice anything that's incorrect, report it immediately to the credit bureau that is showing the incorrect information. Sometimes they're simply reporting errors, or you had an account that was closed and it's still showing open and you need to get that cleared up. But other times it could be more serious. So checking your credit report can be a great way to catch identity theft. You can see, has somebody else taken out debt with your name, your social security number, your information. That will show up on there. Maybe they've got a whole different mailing address and everything. And so you have no idea it's out there. But if you pull your report, you can find that out, because if somebody else is using your information, you need to get that taken care of and wiped out immediately. That needs to get reported as, identity theft, fraud. But again, the only way you know about these things is by checking your report. So we covered 8 different tips here. So let's do a quick recap. So number 1, pay all of your bills on time. Number 2, reduce your credit card balances to less than 30% of their credit limits. Even better would be to reduce them below 10%. So goal 1, get them below 30%. Goal 2, get them below 10%. Number 3, keep old accounts open and use them periodically. Number 4 is limit how often you apply for your new accounts. Number 5, have a variety of credit types, but again, don't go out and borrow money just to get this to happen. But just remember what we talked about before. Number 6, apply for a secured credit card if you have poor credit history or no credit history and aren't able to, obtain a regular credit card. Number 7 is pay off any accounts you have in collections. And tip number 8 was review your credit reports on an annual basis for accuracy. Remember, improving your credit score is a process that's going to take some time. Depending on where you're starting at, you might see a huge upswing right away by doing a couple of these things, or it may take, several months or even, a year or more. But the sooner you start acting on these things, the sooner it's going to improve. And the sooner it starts improving, you get that compounding effect. There's no reason to wait any longer. Start acting on these things today. Start getting yourself in a better situation, because you never know when you're going to need to go apply for a loan or apply to rent an apartment. Things can happen, life can change. And so you want to keep your credit in a good, a good healthy state at any given time, so that it doesn't cost you money by having to, pay more interest or get denied for a loan or denied for an apartment just because there's stuff out there that you just hadn't addressed, but you may be completely able to take care of. So that is that on improving credit scores. I hope that you learned something today and that this video has been helpful to you. Please let me know in the comments below if you have any questions or any takeaways you want to share. I'd be happy to answer your questions, happy to talk with you. And also, don't forget, hit the like button, because that will help this video reach more people. And also subscribe to my channel and turn on the notifications bell so you don't miss out on future videos. Thank you so much for watching, and I'll catch you in the next video.